Good afternoon and welcome to the MP Evans Group PLC Annual General Meeting. Throughout this recorded meeting, attendees online will be in listen-only mode. And a reminder that as set out in the notice of AGM, questions will not be taken during today's event. The AGM will commence shortly.
It is now 12 noon, the time appointed for the annual general meeting, and I have great pleasure in welcoming you to the meeting in the flesh. It's lovely to see you all in this hall where we've had our AGMs for so many years. And I also have pleasure in welcoming those who are watching the proceedings online via the Investor Meet Company platform. So thank you for joining us virtually, and perhaps we'll see some of you in person here next year. A quorum of 2 members is required, and I confirm that more than this number is present. As the notice of meeting has been in the hands of members for the statutory period, may I please take it as read? Thank you. The independent auditor's report to the members of MP Evans Group PLC is set out on pages 53 to 58 in the annual report and accounts. The report is on the group financial statements, including the parent company financial statements. May I take it as read? Thank you. The report and financial statements have been sent to all members, and I hope they provide shareholders with a clear explanation of the group's strategy, its activities, and its profit and financial position as at the 31st of December 2021. Before putting a resolution to the meeting, I should like to refer to one or two matters. First of all, with much regret, sadly, our Senior Independent Director and Chair of our Audit Committee and Remuneration Committee, Jock Green-Armitage, for unavoidable, very urgent reasons that he's had to attend to, is unable to be with us. So he sends his apologies and regrets. And of course, it's all the more of a shame that he can't be with us, given that this will be his last AGM as a director, given that, as you will have seen, he's scheduled to be stepping down at the end of September. But we hope he'll be re-elected for that term until then. But I would like to just take the opportunity, and I'm sure I'll say some similarly nice words next year when he's here in person, to thank Jock for his extraordinary contribution to MP Evans, not just over the last 9 years, but for all the time that we've known him as an advisor, originally with Rothschilds going back some 40 years, and indeed as a director with Rowe Evans Investments. I know he was a great assistance to my father, and we shall of course stay closely in touch with him. But I'd like to thank him on behalf of us all for his excellent contribution, for his wisdom and all that he's provided to the group over so many years. I should take the opportunity to confirm, as will have been you have seen in the announcement, that Bruce Tozer, as from today, has taken over as Senior Independent Director and Chair of both the Audit and the Remuneration Committees, and I know he will discharge these responsibilities in his usual rigorous and independent-minded way. There have been, as again a number of you will have noted, 1 or 2 other changes during the course of the year, perhaps in taking them in chronological order. Tristan Price, our Chief Executive, in July, so almost a year ago, left us to move on to the next stage in his career path, having served with distinction for 15 years, he played a very central role in helping to form, deliver, execute the group's strategy. He was always particularly strong on the CSR, sustainability side of things. He helped us greatly in this area, and that legacy has been continued in a number of ways given its importance. But I'd like to thank him and wish him well for all he is now doing. At the same time, Chandra, who has been with us since 2008 in his capacity as President Director of our Indonesian operations, and has played an absolutely critical part of everything that we do and helped us to expand so well and to such a high level in terms of the quality of our operations over the last 14 years or so. So Chandra joined the board in August, and we are already benefiting from his direct input into board matters. So I hope you have a chance to meet Chandra and indeed his wife Nirmala, so that they're over here for a couple of weeks. So thank you, Chandra. Matthew Coulson, who had been our finance director, was very deservedly, in my view, and the board's view, appointed as chief executive as of the 1st of January of this year. Matthew not only had performed an excellent role as finance director, but also as a key part of the leadership team, and we're delighted with the role that Matthew is playing, and we believe that he and we have a great future together looking forward. In March, we were very sorry to lose Dr. Darian McBain, who also played a really important role in bringing all her vast experience and expertise in the field of sustainability. And she's a world expert in a number of areas, but she was employed on a full-time executive basis, and she simply, as reluctant as she was to give up her directorship, she was unable to continue with us. But for 2 years, we derived the benefit of her very significant contribution. So thank you to Darian for all that you have done for us in your non-executive capacity. We continue to seek, and we believe we are close to having secured a very worthy successor in a non-executive capacity to Darian, somebody who is also very strong on sustainability, but we hope that's something which we can announce in due course. We are also looking forward to Michael Sherwin joining the board as a non-executive director. Michael has had a distinguished career for some 35, 40 years, both in an executive capacity as CFO and as a non-executive director on a number of significant boards of listed companies. He's very good on regulatory control matters, risk management, corporate governance, which is such an important area these days. So we're looking forward to having the benefit of his skills. He joins on the 1st of July. And finally, Matthew is relieved that he'll have some assistance on the finance side, because Matthew is effectively doing 2 jobs in many ways. I've been giving a bit of executive support, but not only in his capacity as chief executive, but also effectively running the finance side. But we have somebody who we have great hopes for, called Luke Shaw, who he sadly can't be here. He's away for a long weekend, but his first job upon joining us will be to fly out and join Matthew and me in Jakarta, and it will actually be our first trip in well over 2 years. Luke has had a senior finance role at Spectrus, and he incidentally spent the latter teenage years living in both Kuala Lumpur and Jakarta, which I'm sure will also be of assistance. Let me now just touch on the trading statement that was released to the market at 7 a.m. I don't know how many of you have had a chance to read this, but this is an update, a trading update with regards to the first 5 months to the end of May. And I'll just pick out one or two key points. First of all, on crops for the first 5 months, by a strange coincidence, they are almost the nearest 0.02%, identical to what they were for the first 5 months of last year, both for the group's crops and for those crops that the group manages on behalf of our so-called scheme smallholders. So the group's crops were just over 342,000, and the scheme smallholder crops were just under 101,000 tonnes, so almost identical to last year. Similarly, CPO production was very similar to last year. It was slightly lower, and that's partly explained by the fact that we bought in the last month or so a little less fruit from the independent smallholders, partly as a result of the temporary ban on exports, and therefore there was a little bit of a build up in the tanks, and we had to look after our own needs, but we were still able to buy a reasonable amount, and those smallholders who didn't have anywhere else to send their fruit could turn to us generally. But that has now been resumed. We are having actually started the year, or at the end of February, as you would have seen, that our crops were some 10% behind what they were last year. But last year was an incredibly strong month, a surge of crops. I mean, crops move in cycles. Although the crop trend is generally on the up, it sort of goes like that. So it's very much on the up cycle. Nonetheless, this year we've caught up, and we expect to forge ahead and to surpass last year's crop level and production level by the year end. We're also pleased to announce that the average ex-Millgate selling price was significantly above what it was at this time last year, literally 51% higher than what we achieved last year. So although there was an impact from the export tax, from various other taxes, the export ban, actually the net result, as far as what we have achieved, ex-Millgate is still a very, very strong price indeed relative to previous years, and all the more exciting given that the crop trend is still on the increase. The current Millgate prices that we're achieving at the moment are around $8.50, but even that is above the average of last year, which was a record year of $810. So this is all very positive news. As you know, sustainability lies at the heart of what we do, and I won't elaborate on that here, but the key 4 pillars of our strategy, of which the number 1 pillar is absolutely critical, is to be a responsible producer of sustainable Indonesian palm oil, striving for excellence in all our operations, with a focus on continuing growth. And growth comes from 3 sources. 1 is because we're on an upward growth path anyway. 2, because Chandra and his team are always striving to and succeeding in achieving higher and higher yields because of improving agronomic practices. You know, it's never perfect. There's always room for further improvement. And also because we continue to seek out new areas of land, incremental land around the current projects that we have, so that we can maximize the use of our milling capacity. And that hunt goes on. I mean, it is competitive at the moment because of the strong price environment, and we perhaps have to be patient, but we're confident we will get there, and that we will acquire new additional areas to add to that growth, leading to enhanced yield. And in yield in this sense is dividend returns. And as you know, an increased total dividend of 35 pence has been proposed in respect of 2021, and it very much remains the board's intention to continue the group's long-term trend of at least maintaining or increasing dividends for our shareholders. I think we're at the point now where I'm going to hand over to Matthew, if that's the appropriate time.
Yes,
so I will sit down and let Matthew give a presentation to you.
Thank you, Peter, and good afternoon, everybody. So I think at this stage, what I'd like to do is just share a brief presentation with you all, focusing on 2021 and thinking about our strategy, thinking about our operations, and briefly touching on our results for 2021. If we could turn to the first of the slides, this picks up on what Peter was just discussing around our strategy and those 4 key pillars. As Peter explained, the key pillars are around responsibility, excellence, growth, and yield. Peter was just talking to you about growth and yield in detail, so I won't go over those again, but perhaps just to highlight the first 2 of those pillars that enable us to deliver growth and yield. Everything starts with being a responsible operator. That means being a member of the RSPO, the Roundtable on Sustainable Palm Oil, and ensuring that we don't deforest, that we're committed to zero burning, we're committed to zero waste, and that as a responsible operator, we provide housing and other community facilities for the people who work on our estates. Being a responsible operator means that we can then move on to the second pillar of our strategy, which is striving for excellence. That means investing for the long term, not just investing in assets, but investing in our people as well. And by doing that long-term investment, we're able to deliver those high yields and high extraction rates you see coming through in the results. As I say, I think Peter has covered very clearly what growth means for us, those 3 areas of growth, and how that leads to the yield we can offer to our shareholders. So if we turn to our next slide, this is focused very much on sustainability and what sustainability means for us. And firstly, to be clear, sustainable palm oil provides a high yield and low cost solution to meeting growing demand while safeguarding people and our planet. And it's important to note that there is an ongoing increase in demand for vegetable oils, and in particular for palm oil. When you look at the vegetable oil market globally, palm oil is the biggest component of the vegetable oil market in the world. And roughly, the palm oil market globally is 70 million tons, a huge market for palm oil. And projecting forward up to 2050, it's very hard to give a precise amount, and you look at what the ranges of estimates are that are made, but you can see that the demand for palm oil is only going to increase, and some say to 120 million, some say as much as 150 million or more tons that are going to be demanded by 2050. At the moment, only 20% of palm oil that is produced globally is currently certified as sustainable. Now, it's important to note that whilst that's a measure of certified sustainable palm oil, that doesn't necessarily mean that 80% of production globally is done in an unsustainable way. It's about certified sustainable oil. We're committed to increasing our certified sustainable output, but importantly, we're committed on all of our operations to acting to certified sustainable standards. It's worth being clear the way in which the sustainability certification works. Certification is attached to mills, not to estates. We've been extremely focused, as we'll come on to talk about in a bit more detail in a moment, on increasing our own milling capacity. And it's very important for us to achieve a position where we're essentially milling all of our own harvest. As we've been working through that program and moving towards that ambition, so we will be able to obtain certification for all of the mills that we've been building. There is a time lag. When you open a new mill, it doesn't instantly become certified, even though all of the estates that we develop, all of the estates from which we harvest and take fruit to our mills are absolutely run to sustainability standards. We go through a process with the RSPO of audit and accreditation. That audit and accreditation is extremely thorough, extremely detailed, and takes a period of time, as you might expect. This is the fundamental reason why you see the difference between 100% of the group's plantations being operated and developed to RSPO standards, and yet at the current time, our output is 55% certified. We expect to see that increase significantly as our mills are completed and then our mills achieve the certification standard. We expect to have 2 more mills achieve RSPO certification standard within the next 12 months. That will help move the dial with that 55%. We're pleased to be able to say that demand for sustainable palm oil is definitely increasing. And the evidence we can share for that is the way in which sustainability premia are increasing. So when we sell oil, our output, our CPO, the certified sustainable palm oil, we get a little bit extra. It's not a huge amount, but we get a little bit extra as a sustainability credit. And you can see that in 2021, the amount of income we received jumped up from 2.6 million in the previous year to 4.3 million in 2021. And you can see the benefit, not only because it's the right thing to do, but the benefit financially of selling certified sustainable palm oil. If we can move on to the next slide. What this slide shows us is the story of where we've been, where we are now, where we expect to be going to in terms of crop and, importantly, in terms of milling capacity. The chart on the right-hand side starts in 2010, and it shows the crop that we were able to harvest and mill and the milling capacity that we had. So the bars show us the crop, and the line shows us our milling capacity. Back at the start of the chart in 2010, we harvested and were able to process a little under 200,000 tonnes, and we had 1 mill. If we move forward to where we are in 2021, which is the bars that are outlined in the red outline, we processed over 1.3 million tonnes, and we had 5 operational mills by the end of the year. A significant change over that time period. And you can see as we then move forward over the next 5 years how we expect things to continue to develop. And we're able to look forward and think about how we expect things to develop, because once you've planted an oil palm or an area of oil palm, there is a relatively high degree of predictability about how that crop is going to develop. Because as you plant an area and as you apply appropriate management techniques to that area, so you can see how the yield profile from that area will increase over time. And none of this chart is based upon increasing the area that we have, making acquisitions, developing something different within our strategy. This is based upon what we already have. And you can see what it means in terms of increasing harvest for us. And in terms of milling capacity, you can see the increase in milling capacity as we've moved from 1 to 5 mills operational. And we're busy developing our mill in South Sumatra at Musi Rawas right now, and we expect that to be on stream around the end of this year. And importantly, as we build more mills and we have more mills on stream, so as we process our own crop, so we get more margin as being the millers of our own crop. If we can move on, Mark. What we have here, and perhaps let's focus very much on the picture here, is an example of one of our estates and one of our mills to share with you. This happens to be our estate and our mill in Bangka, which is the third mill in our journey of developing estates and developing mills that was opened in 2016. And hopefully what you can see clearly from the picture is a large amount of planted area, well-managed planting around the mill, and you can see the planting, the road network around the mill, and then the milling facility itself in the centre of the picture. And what's very important to us is when we build a mill, we build a fully integrated milling facility, as it says in the title of the slide. We aim for a very much a holistic approach and a zero waste approach. And so, as I say, in the centre of the picture, you can see the mill itself, and underneath the mill, the yellow structures, the storage facilities for the CPO that's produced. Then off to the left, you can just see the compost facility. So one of the byproducts that comes out of the mill is an empty fruit bunch. Once the fruitlets are removed from the bunches, you're left with an empty fruit bunch, and that empty fruit bunch is taken to a composting facility, which turns the empty fruit bunch into an organic compost, which is then sent back out into the field to then help improve the quality of the soil, to then help improve the yields from the fields that then send more fruit back into the mill. And then at the bottom of the picture, you can see the mill's associated biogas facility. That takes some of the waste from the mill, processes that waste, and turns mill waste into green electricity. That green electricity then powers the mill, powers the entire estate, and then there's still surplus electricity left over, which is used to sell to the local grid, to be used within the local community, and provides an extra income for the group. As well as sourcing crop from the estate itself, to ensure that we're using the mill to its maximum efficiency, we source crop from independent growers nearby. And in Bangka, we've also been working with those independent growers near to the mill on something called RIS, which is the RSPO Independent Smallholder Scheme, which seeks to support independent smallholders to enable those independent smallholders to become RSPO certified as well. So that whilst we can obtain certification credits for our fruit, so those independent smallholders will be able to obtain certification credits for their fruit by going through training, by improving the way in which they go about the methods of farming on their smallholder areas. And we've been supporting and promoting that to the smallholders around our Bangka estate. So hopefully that gives you a sense of a fully integrated facility. And this is, if you like, the template for all of our facilities across Indonesia. And we will be aiming to do exactly the same in the new project that we're building, the new mill that we're building in South Sumatra at Musi Rawas. If we can move on to the next slide. A very brief word on the financial results for 2021, which I'm sure you've all had a chance to study in detail already by looking at the annual report. Very important just to highlight, it's a story of increases across the board. So increasing revenue, increasing profit, and increasing earnings per share. So revenue up by more than a half to $276 million, obviously because of the increase in our production, because of the increase in CPO prices, and of course, again, just reminding you of the benefit of that additional element of increasing sustainability premium. And then because of the increases in production, increases in prices, so we see that falling through to a big increase in gross profit, a gross profit of over $100 million in 2021. And then again, falling through to earnings per share of over £1, earnings per share of 115 pence in the year, a substantial increase on the previous year. Normal dividends up to 35p, and obviously the special dividend that was distributed in February in relation to the sale of Burton Estate. So moving on, this just covers the trading statement that I think Peter has already referred to in some detail. So again, I won't dwell here. We've dealt with crop, production and prices. Important to note that we continue to be highly cash generative. At the end of 2021, we reported a very small remaining net debt position on the group's balance sheet. That has now become net cash very much. And so important to highlight the change that we've been through in the balance sheet of the group. When we came into the beginning of 2021, we had net debt of almost $80 million. So that pretty much disappeared during the course of 2021. And as we move into 22, you can see how we're becoming an even stronger position on the group balance sheet. And then, as I've said, development of the mill continues in Musi Rawas, but planting continues in Musi Rawas to ensure that we will continue to have crop coming through to support that mill. And as I mentioned, RSPO certification is coming along well at the mills that we opened in the last couple of years. And then the final point to leave you with is one on coming back to the point around yield and returns for shareholders. What you see on the chart here is the 30-year look back on what's happened to returns for shareholders. You can see here an unbroken track record over 30 years of increasing returns. And in particular, if you look over the last few years, how there's really been an acceleration of increasing returns for shareholders, really reflecting, again, coming back to the point about long-term investment, and that long-term investment really paying off now as those yields, as those crop increases come through, and the cash flows come through, supporting those increases in returns for shareholders. And of course, I think it goes without saying, but I'll say it anyway, that we would be very reluctant as a board to give away that long-term trend of dividends only going in the one direction. So that's all I have from a presentation point of view, and I'll pass back to Peter.
Thank you very much, Matthew. Well, I'm now pleased to be able to answer between me and my colleagues any questions, general ones, or particular points on the report and financial statements. So if I can throw it open to the floor, and I think Mark is there ready with a microphone.
Absolutely.
So are there any questions? Yes.
Thank you very much. My name's Phil Clark. I'm an immensely happy shareholder. This has been a fabulous experience owning these shares. It's wonderful to see a board and the management team that actually has a strategy, executes it well, and more than that, it is also lucky in that when you've now got maximum production, you've also got high prices. This is a fabulous place you've taken the company to. So thank you very much for that. I'm also particularly pleased that actually we've moved to net cash rather than net debt. That's another great achievements. Well done for that. But actually, it does bring with it certain dilemmas. And so I want to talk to you about Resolution 9, please. The suggestion that we buy back our own shares. As a retail shareholder, I own shares in a number of companies, and my experience of share buybacks is immensely mixed. For example, BP, another oil company, although slightly different, in the decade up to the pandemic, bought back shares at an average price of about £5.50. During the pandemic, it could have bought back shares at £1.90, but didn't. And today the share price is a whisker over £4. It's been an absolute disaster buying back shares. So my question to the board is, how will you be certain that any buybacks will really add value and won't look foolish in a few years' time when something changes and something works against us? Can I also add to that is, personally, I'd much prefer that you actually reinvested in the business and grow the business. So it'd be interesting just to know a bit more about what you're doing to actually find further opportunities for investment. And finally, can I just say, as you're taking quite a risk in buying back shares, it might just be a better thing to pay special dividends to shareholders and let us take the risks and make our own mistakes rather than you risk doing it yourselves. So the third question is, could you actually consider doing special dividends instead of buybacks? Thank you.
Well, thank you very much, and for those very kind words, which is much appreciated by us all. We've all been working hard towards what we have been achieving. And actually, when you made the point that we've reached maximum production at maximum prices, actually we've still got some way to go. And that's just with what's in the ground. We're going to push on with increasing volumes because our plantings are still relatively young, and that's without any further acquisitions. So we've still got some significant way to go in terms of increasing crops, increasing volumes of CPO production. So I'd make that point, and that actually provides some, if you like, protection in terms of the capacity to continue to pay dividends, because even if the price comes down, if the volumes are increasing, then we can be at the sort of status quo in terms of the still significant margins or profits that are being earned from the higher volumes. And as a general strategy, we have tended as a board, which is one of the reasons why we've achieved that extraordinary record of only maintaining or increasing for 30 years. We have tended to be perhaps a little bit less full, less generous with our dividend payouts in the fuller, better, more profitable years, and a little bit more generous in the leaner years. And I think generally our shareholders have been very comfortable with that, rather than a very up and down approach to dividends as a percentage of earnings. And we would very much seek to continue that trend. We certainly are continuing to seek suitable opportunities to acquire new projects, as Matthew has pointed out, to fill the current capacity to the full, to get the maximum benefit from our mills, the throughput there, and further down the track to make bigger acquisitions as well. However, we think there's no better investment in terms of the absolutely first-class quality of land that can be purchased than MP Evans estates. I'm not saying that flippantly. We genuinely believe that. And even at, the current price of £10 a share, I don't know, Matthew, whether you can venture in terms of what that would, obviously it depends on how some of the assets are valued, but in terms of the value, in terms of dollars per hectare, it's certainly significantly less than the going rate for plantation land. So we're effectively buying land that we know well, by buying back our own shares. And this is a genuine investment opportunity. It's not something to sort of prop up the share price. It's actually an investment opportunity. And we believe that the right thing is to for shareholders to support that, because we're still at a significant discount, we believe, to its full value. Do you want to add anything there, Matthew?
No, I think that's covered it very well. I mean, I suppose the only thing I would add is that you present the sort of classic question of the choice that we face as a board, if you like, between share buyback, distribution to shareholders, investment in growth. But in some senses, it's not an either or. I think we actually have the capacity to do some of all, if you like.
Yeah, and I mean, generally on the matter of special dividends, we've tended to pay special dividends as and when there's been a special situation that's arisen. For instance, the sale of Bertram Properties, or the remainder of Bertram estate to Bertram Properties, the sale of Agrimuco, our share of Agrimuco, the sale of NAPCO going back. We would like to use the cash to invest in new projects and other things. So for the moment, we'd like to continue that upward trend of normal dividends, but it's something which we wouldn't necessarily rule out, but that's not the current policy. Any more questions?
Scott Wallace, long-time shareholder. I'd like to endorse Mr. Clark's comments and compliment the board for their good year. And I just wondered, I think in about 4 or 5 years ago, we received an approach for about £11. I wonder if there have been any approaches since then. You probably won't tell us.
It wasn't £11. It was an initial offer of £6.40, followed by a renewed offer at £7.40. We recommended to our shareholders, notwithstanding that the share price had been languishing at closer to £4, and we recommended to you that you reject the offer, even the higher offer, and you, 87% of you anyway, accepted our recommendation, and I would like to think that we've been vindicated in that recommendation, because the bidder was only too aware of the real value that was coming through. I mean, they are very shrewd plantation owners and operators with whom we've actually, strangely enough, always had a good relationship, and they are now shareholders. They've come back afresh. They've acquired a shareholder. They're our biggest shareholder with a 23% holding. But they are a very supportive, significant minority shareholder, and they endorse everything that we're doing, and our relations with them are extremely good. So on the matter of, I mean, obviously I couldn't comment if there had been a recent approach, but I'd perhaps leave it there as my response to that. Any more questions? Yeah.
Thank you. I think it's a relatively small part of the operation now, but I wanted to ask about Bertram Properties. A little bit confused by the reference in the on this page where you refer to the geographical spread of things.
Yeah.
You've got Bertram Estate was wholly owned.
Correct.
And we've sold 70 hectares to Bertram Properties.
Correct.
And they now have 70 hectares more than they did before.
Correct.
And we still own 40% of their company.
Correct.
Right. So it says the remaining developable area is 214 hectares. That's 214 out of Bertram Properties 318, is it?
Yes, I think that's right. The remainder,
Yes,
that does refer to the Bertram Properties area. Yes, it's the remainder of the area which, I mean, we sold Bertram Estate 25 years ago to Bertram Properties, and at that point it was some 4,000 acres, of which some 200 or 300 acres remain. and it's been topped up a little bit by this recent acquisition from the sale of Bertham Estate to Bertham Properties. And so broadly speaking, Bertham Properties has another 300 or so acres left of what used to be some 4,000 acres, but which over the last 25 years has been developed into a new town. I mean, we have become, passive, if you like, partners, because it's not our area of expertise, but we have been shareholders, 40% shareholders in a very significant and profitable development. We've never had to put new money in. We've only taken dividends out from the development and the sale of property, whether it's housing, industrial areas, shops, you name it. And that will be developed out within the next number of years.
So when it says the developable area is 214 hectares and the total area is 318, that's 100 hectares that's not developable, is it? Because it's cliff land or something?
Well, that may be, I think that may be the golf course.
It's because it's a golf
Sorry,
course.
that's the golf course.
That's the golf course, right.
Yeah.
And this Bertham Properties, is it separately quoted?
No, it's a private company.
Right.
It's owned 40% by us, 40% by the Urban Development Authority, one of the biggest federal housing developers in Malaysia, and also Johor Corporation. And actually the whole thing came about because of Johor Corporation, because they were originally shareholders in Bertham Holding, which was the Malaysian MP Evans sort of investing entity in Malaysia. And because of the relationship between Johor and UDA, they approached us, and we went for a sort of tripartite development of our estate.
And can I just ask the follow-up question? I'm sure I can find it in the accounts if I look hard, but how much is what is the current valuation of our minority share?
Of our share, is it around $50 or $60 million?
It's not quite that much anymore.
No, not quite that much anymore.
Because of the sale.
Yeah.
So it's on page 96 of the annual report that the valuation of the 40% share of Bertham Properties is $47.6 million.
Uh-huh.
Okay. Yeah.
And what basis is it valued on?
It's an independent valuation, isn't it?
So it was done by a Malaysian property valuer based upon the development, the value of the remaining development land.
So, right. So it's not the value of the shares, it's the value of the underlying assets.
It's exactly, it's the value of the remaining development land, the assets.
Right. Thank you very much.
Thank you. My name is John Crawford, and I noticed a lot of products, consumer products, are saying no palm oil in this product, and they say 100% vegetable oil. Could you explain why you're not promoting the sustainable palm oil? Because obviously manufacturers are not using palm oil in some of their products.
Sorry, could you just say, can we explain why we're not
Promoting
right?
Sustainable palm oil.
Yeah, well, we try to, but I'll let our chief executive have a turn in answering.
Thank you very much. Yes. I mean, I think you make a very good point about the approach taken by some consumer product companies. And I think it's extremely important for everybody involved in the palm oil industry to seek to get the message across about the importance of certified sustainable palm oil. We do everything we can as a relatively small company within a very big industry. And as I mentioned, the palm oil marketplace currently is 70 million tons, of which last year we produced about 300,000. So you can do the maths to get a sense of what proportion of the world's palm oil we contribute. But I think your point is an extremely well-made one, and I think it's for everybody in the industry to do as much as they can to get the message across about the part that certified sustainable palm oil has to play. I think it's short-sighted and I would say wrong to seek to take out sustainable palm oil from your ingredient list and simply substitute in other vegetable oils which may have no better environmental credentials than certified sustainable palm oil. So I agree with the sentiment behind your question entirely.
Any more questions?
Thank you. Can you actually elaborate a little bit more on what happened in the temporary suspension by the Indonesian government on exports and what they've achieved, and whether you foresee it happening again?
Sure. Again, perhaps Matthew, would you like to take that one? Yeah.
Yes, absolutely. So the Indonesian government made a decision at the end of April to, as you say, temporarily suspend or ban the export of palm oil and related products. They were very clear at the outset that it was going to be a temporary ban, and their objective was to provide some support to the local market and to make palm oil and cooking oil more affordable for people in Indonesia, given how fundamental and how much of a staple product it is for local consumers. The ban was very short-lived. It was lifted on the 23rd of May. As to your question on whether it fully achieved its objectives, very difficult to say, questionable at best, I would suggest. And as for whether there are going to be any further measures of that type, no indication at this stage. I think the palm oil industry now is just working back towards normality at the refiner level. Obviously, there was some significant delay, stoppages of exports for refiners, and refiners are now just working through getting their stock levels back to normal. We very much hope to see normal activity from the refiners from this point onwards.
Okay. Do you have one? Yes.
Yeah, Davey is ordinary shareholder.
Nice to see you again.
Yeah, thank you. And you, all of you, yes. Who actually is this body that certifies the, the palm oil and all sorts of other sort of agricultural things as sustainable? Who is this body, and who certifies them, in other words, almost?
Okay, well, I mean, there are actually two bodies, but the main one is the RSPO. But Matthew, do you want to absolutely take that?
Yes, of course. Yeah. So Peter's right. There were two certifying bodies. The main one being the RSPO. There is another one called the ISCC. We are members. We obtain certification from both. But the primary one to focus on perhaps is the RSPO, the Roundtable on Sustainable Palm Oil. That is a membership body with many hundreds of members, whether it's made up of producers, refiners, finance institutions, consumer products, companies, NGOs, etc., etc., etc. But as I mentioned, the way in which the RSPO worked is it will provide certification to a mill that produces CPO. So we work through a process with the RSPO to ensure that they certify all of our mills so that the output from those mills can be treated as certified sustainable palm oil. Now, the RSPO publish a whole load of principles and criteria for enabling a palm oil mill and the area that supplies a palm oil mill to become certified. It's extremely detailed. It requires you to go through a whole load of checks, audits, accreditation on an ongoing basis to demonstrate that you're acting in the way that you should be, that you are only using land that's appropriate for cultivation, that you have appropriate employment standards, that you are treating the local community in the right way, etc., etc. There are numerous things that the RSPO will want to check and audit continually to support the fact that that you can be certified and can maintain your certification, which is why, as I said, it's not the case that the day after you open your mill, you can start selling your oil as certified sustainable. It takes a year or more, even though we will try and get through it as quickly as possible. It will take a year or more to do everything you have to do with the RSPO before they will give you their seal of approval, and you can then start selling as certified sustainable.
Do you compete with other mills to buy the produce of the smallholders? And also, Mr. Walker of Iceland, I shouldn't mention names probably, but he always talking about not using palm oil. About a month ago, he came out and said he's reluctantly going to use palm oil. And also, one thing, the oil price generally is very volatile and has been for the last sort of, I don't know, 20 years really. So you've had enormous spikes, enormous depths of cheap oil, and palm oil prices have tended to follow the crude oil price up to a point. And I could visualize, in a couple of years' time, they're going to flood the world with oil again, crude oil, and which will drop all the oil prices generally. So that's
There's a lot of demand.
So to deal with the points that you make, first of all, do we compete with others for smallholder crops? When it comes to, there are two sorts of smallholder. There are our associated scheme smallholders who are attached and very much connected to our own areas. Do we compete with others for their crop? Basically, no. They're very much connected to us. Do we compete for independent smallholder crop? Yes, in the sense that they have no obligation to sell their crop to us. But we build relationships, of course we do, with independent suppliers. And so we would hope that counts for something, but of course it's a marketplace for independent crop. Mr. Walker from Iceland has said previously, obviously he didn't want to have palm oil in his own brand products. He's of course at liberty to have that view in terms of how he approaches running his business. And it comes back to what we were just talking about earlier, with people choosing not to use palm oil as an ingredient in their products. I think it's a shame, and I think there is a place, absolutely there is a place for certified sustainable palm oil as a valid ingredient. If you need to use vegetable oil as an ingredient in a product, then don't discount using certified sustainable palm oil. It has a place and it deserves to be a valid ingredient in your product mix. And your third question about the way in which the commodity price for CPO moves is it's a commodity, and of course it's going to move, but the connection with mineral oil, there is inevitably a bit of a connection as use for biofuel starts to increase, but it's still a relatively small part of the overall mix when it comes to using, what does palm oil get used for? It's basic food stuff. It's a cooking oil. So why does supply and demand drivers cause the price of palm oil to move? Well, it's supply and demand drivers to do with it being a cooking oil, I would suggest, rather than the fact that a small proportion of it is used as a fuel.
Thank you very much. Would you mind very much if we perhaps proceed with the formalities? I'm just conscious time is moving on, unless somebody has a really burning question they'd like to ask in open forum, but we are all here as a board to answer more questions more informally after this. So may I continue now with the formal procedure? But thank you very much. All very good and stimulating questions, and thank you very much for all of those. I now propose that the report of the directors and the audited financial statements for the year ended 31st of December 2021, now laid before the meeting, be received. I put the resolution to the meeting. Those in favour? Those against? I declare the resolution carried. In accordance with the UK Corporate Governance Code, I announce that we've received proxies in respect of 28,623,193 shares, although voting on 7,280 shares has been withheld on Resolution 1, voting on 4,839 shares has been withheld on Resolution 2, voting on 620 shares withheld on Resolution 3, voting on 1,120 shares withheld on Resolution 4, voting on 1,120 shares withheld on Resolution 5, voting on 265 shares withheld on Resolution 6, we're getting there, voting on 10,440 shares has been withheld on Resolution 7, voting on 4,691 shares withheld on Resolution 8, and voting on 1,489 shares has been withheld on Resolution 9. Notwithstanding this, of the votes cast, not less than 99% are in favour and not more than 1% are against resolutions 1, 2, 3, 4, 6, 7, 8 and 9, and not less than 96% are in favour and not more than 4% are against resolution 5. A schedule of the exact numbers for each resolution is available from our company secretary, Katya, to anybody who would like a copy. I now propose that the Director's remuneration report as set out in the annual report and audited financial statements for the year ended 31st of December 2021, now laid before the meeting, be received. I put the resolution to the meeting. Those in favour? Those against? I declare the resolution carried. I have pleasure in proposing that Mr. K. Chandrasekaran be elected a director of the company. I put the resolution to the meeting. Those in favour? Those against? I declare the resolution carried. I have pleasure in proposing that Mr. Jock Green Armitage, a director retiring in accordance with the company's Articles of Association, be re-elected a director of the company. I put the resolution to the meeting. Those in favour? Those against? I declare that resolution carried. I have pleasure in proposing that Mr. Philip Fletcher, a director retiring in accordance with the company's articles, be re-elected a director of the company. I put the resolution to the meeting. Those in favour? Those against? I declare the resolution carried. I now propose that a dividend of 25 pence per share be paid on or after the 17th of June 2022 in respect of the year ended on 31st of December 2021 to all holders of shares on the register of members of the company at the close of business on 29th of April 2022. I put the resolution to the meeting. Those in favour? Those against? I declare that resolution carried. I now propose that the total amount of fees payable annually to all of the non-executive directors, excluding any remuneration for special or additional services paid pursuant to Article 102, be increased to £250,000. Incidentally, this hasn't been reviewed since 2010. I put the resolution to the meeting. Those in favour? Those against? I declare the resolution carried. I now propose as an ordinary resolution that BDO LLP Chartered Accountants and Registered Auditors be appointed auditors of the company to hold office from the conclusion of the meeting until the conclusion of the next general meeting, at which financial statements are laid before the meeting in accordance with Section 4371 Companies Act 2006 at a fee to be determined by the directors. I put the resolution to the meeting. Those in favour? Those against? I declare the resolution carried. I now move on to the special business of the meeting and propose as a special resolution. The resolution is set out in the notice of meeting numbered 9. This resolution gives authority for the company to purchase up to 10% of its own shares during the coming year as and when the directors consider it appropriate. I put the resolution to the meeting. Those in favour? Those against? There was a majority. Yes, yeah. I declare the resolution carried. Before concluding the business of the meeting, it's always been customary for a vote of thanks to be proposed by a shareholder to our staff and workforces throughout the world who have continued to operate. I mean, we've almost forgotten about COVID, but nonetheless, they continue to operate without interruption. There continue to be challenges over and above the normal one under Chandra and his team. They've all done an excellent job, and indeed, I believe, in our UK office, and also with our associated business in Malaysia. So if a shareholder were kind enough to propose, thank you very much, because that's appreciated. We'll note that down. Chris Moore, thank you very much. So it just remains for me to thank you all very much for attending. As I say, in the flesh this year, it's been wonderful to see you all, and we look forward to chatting more over perhaps a glass of wine or two and a sandwich or two. I think we've been blessed, as we usually are, with some, dare I say, verging on the tropical weather. Perhaps that's not quite as warm as that. But anyway, I look forward to chatting to you all further downstairs in a few minutes with my colleagues. So thank you all very much.
Thank you to the board for updating attendees today. Could I please ask attendees online not to close this session, as you'll now be automatically redirected to provide your feedback in order that the board can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the board of MP Evans Group PLC, we'd like to thank you for attending today's annual general meeting, and good afternoon to you all.